Hey folks, welcome to Mr. Market's Mentor. I'm Andrew Packer, your host, and this is for the market week ending Friday, August 11, 2017. Markets are pretty jittery this week on geopolitical events, fear of a potential war, possibly even nuclear with North Korea. These are short-lived events at best, and everything from the 9/11 attacks to the Cuban Missile Crisis. The fear has weighed on the markets in the short term, but then within a month after that crisis goes away, stocks are usually at pre-crisis highs, if not moving higher. So we might have a few rough days ahead in the next trading week, but I really wouldn't sweat it too much. These are just short-lived fears. What matters over the long term are the fundamentals, and that's what the underlying companies behind your shares of stock are doing operationally. Are they growing? Are they not growing? Do they have a new product? Is their existing product starting to see its sales fall off? These are the things that really matter and what drives stock prices higher or lower over time. Now, there's one entire sector of the market that actually I think made a key turnaround this week that may have gotten hidden behind the market fear headlines. That sector is retail. And unless you're Amazon shares, it's been a terrible year. The problem, of course, is that Amazon is sort of the proverbial elephant in the room. It's at a point now where its market cap is larger than Target and Walmart and all of the mall retail plays combined. And all of these other names have been out of favor with the market. But that is starting to shift a little bit. I think the market is starting to understand that there are limits to Amazon's growth, whether organically or whether through the potential threat of some kind of government intervention for getting too big, for becoming too monopolistic. And we've gotten to a point where a lot of the weaker plays in retail have already been weeded out via bankruptcy. So now we're at a point where there's sort of what I call Amazon plus one. In any given space, there's room for Amazon and for a sort of traditional brick and mortar retail store to compete. So in books, it's Amazon or Barnes and Noble. Electronics like Amazon and Best Buy. For sporting goods, home goods, you name a category, there's sort of Amazon and there's another player, and that's sort of where the industry is ending up. So at the end of the day, it's not really going to be a monopoly by Amazon, it's going to be a duopoly where Amazon is one side of that and some other brick and mortar retailer is the other. What Amazon really has done to revolutionize retail is it's commoditized the space. It's letting the law of one price in economics come into play. What I mean by that is if you go to Best Buy, you see a DVD like it's $20, you go on Amazon, on your phone, you see it's $15, you show it to them, they'll price match. And then you have it same day, you don't have to do the Amazon shipping, or if you're in a place with same day drone delivery, you don't have to deal with that. You just have it right away, but it's the same price and the lowest price that you would pay otherwise. So that said, as an investor, are Amazon's days over? Ever since earnings, the share price is off a little bit, but I would say if you use Amazon, you should own shares. You should own shares of most publicly traded companies where you're doing business with them on a regular basis. I say that as an investor in the sense that I want to get my money back. I also know from dealing with them as a customer what I can expect. So usually as a shareholder, that works out pretty well. The problem with Amazon is valuation. The market is still valuing it very high. But it's also a company where Amazon doesn't necessarily want to be in the traditional, I'm growing earnings in that sense. They take a lot of the money that they bring in and they keep reinvesting it and keep trying out new ideas. So you've gotten to a point where, from a conventional standpoint, Amazon's a difficult beast to manage and sort of evaluate, but if you use our products, you should own some shares. Now that said, I think the more enticing play here are in some of the more beaten down retail names that are starting to show some signs of life. For instance, this week, Kohl's, ticker KSS, came out, had some really solid earnings numbers. They're still bringing people into stores. They have a strategy of just always having something on sale, always having some reason for investors and shoppers to come on in and check out their items and do some buying. And when it comes to clothes, I've also found, just from talking to people, some people just want to try something on before they buy it, but they don't want to buy 5 or 6 things online, have it shipped to their house days later, find out 5 of those things don't fit, and then they have to do a series of returns. That's sort of too much of a hassle. So that is one area where I think there's still some strong competition and where other companies can do well relative to Amazon. And that's something that I've been talking about a fair amount in my weekly blog on moneynews.com every week. And another company that looks somewhat interesting here is GameStop, ticker GME. I think they do a little better when there's like a new console coming out. Earlier this year there was a Nintendo Switch. They saw a bump in sales, but Amazon sells new video games, but they're not in the used video game market, and that's an area where I think GameStop has a tremendous advantage, where people can just go in, trade in their old video games, get a credit for new ones, or buy somebody else's used games, and they've essentially created sort of their own swap market out of that. So there's a place where they have a unique characteristic that Amazon isn't quite able to replicate yet. And maybe that changes someday, maybe it doesn't. But if you're looking at the retail space, it's an area where you can get incredibly attractive valuations relative to the overall market, but especially relative to Amazon. So I think it's an area where we've seen from the earnings numbers coming out that things are doing well. Things aren't necessarily pricing themselves as though Amazon's going to completely take over the retail world. I don't think the sector is doomed at all. I would avoid companies in the mall space. I don't think that's necessarily the best business model, but the big box companies, they're going to survive. The ones that have at this point, I think they're in pretty good shape. And if you're just looking for short-term returns, I think these are companies that are good for a 20-30% bounce, while Amazon shares are still trying to figure out where to go from here. So as an investor, yeah, if you have Amazon Prime, if you're buying all your stuff on Amazon, look at buying some shares. I know they're expensive and you might only be able to afford one or two, but you should always invest in things you own, especially if it's coming off the highs like it is. But in the meantime, there's the other half of the retail sector that looks like it's actually starting to come off its lows, so it's got better growth prospects and better return prospects over the coming months. And that's really, no matter what the market does, there's always some sector that's going out of favor, or there's some sector that's coming into favor. So as investors, that's what we want to do. We want to find where the relative value is, and we want to buy there. And as markets are kind of having a bit of a jittery week, the fact that the traditional retail space is starting to turn around looks incredibly attractive. So take a look at that, do your own homework and research, and maybe there are some retail companies you like specifically that would be a great fit for you in your portfolio. But check it out. The valuation is definitely turning around, and I think the sentiment's about to turn around, while Amazon might sort of trade sideways for a bit. So consider that as an opportunity amidst this kind of crazy and hectic market week that we've had. So thanks for joining us today on Mr. Market's Mentor. I'm Andrew Packer, and until next time, stay safe and stay solvent.